We believe that real estate investment is not measured in dollars or doors, but in relationships and the lives that you change and improve with everything that you do.
We're a full-service real estate investment company. We work on projects both big and small, so ranging from single-family homes to large multifamily projects. And what we love to do is bring together people and property. So we create massive value for investors, residents, and the community. And it's really just the greatest work ever. We just love doing what we do.
We think the thing that we do that sets us apart the most is our property management. We think that if you create a customer experience that is unrivaled, people are going to be your fanatical fans, and we see that with every single one of our residents.
We say that we're real estate investors because that's what people understand, but really we're investing in relationships.
That's right.
We are using ourselves as a conduit to bring together investors and residents, and in doing so, creating value for everyone that's involved there.
We want to partner with investors for a lifetime to build generational wealth, to create a dynasty, and to create something that will last beyond our time on this earth. And when we're partnering with the residents who live in our properties, we think the exact same way. People just love living in our properties. They don't want to leave, and we'll even help them buy a home when that time does come for them. And that's, of course, a win-win for us and for the investors.
It's an interesting path how we came to be full-time real estate investors. So prior to doing this, Nick had a long career in technology, and I'm a physician.
And we love how we're able to take the culture and technology and best practices from those two industries, talking about continuous improvement and serving people and applying that to real estate.
Real estate has such a family focus. That starts with our family. So even though our children are quite little, we involve them in what we do. They know that we get the privilege of creating living experiences for people.
We're creating a legacy not just for ourselves, but for our children and for all the families that we serve. We are so proud to be a family-owned business, and it's a huge part of what we do. As we look forward to the future, we look at partnering with countless more people and being able to serve more investors and more residents, and serving so many people that we change what people think in their minds when the phrase landlord or tenant or property management or real estate investment is spoken. We think that we have the opportunity to change people's ideas about what's possible and what they should expect from their living experience. If you'd like to be a part of this story, if anything you've seen here resonates with you, if you'd like to invest with us, go to meetblackswan.com right now and schedule a call with us today. We'd love to connect. Good afternoon, everybody.
Good to see you all. I was thinking this morning, it has been like well over 6 or 8 or 9 months or so since we've launched a fund.
Mm-hmm.
So we're super excited about that. So welcome everyone to the official launch of the Secure Freedom Fund. We've had it soft launched since November of 2024, and we're excited to officially announce it to our broader community today. Today is also a very special day. Today is Rachel's birthday. So many of our existing investors have come to know and love Rachel. She helps with all of our passwords, technical issues, help with InvestNext, signing paperwork, receiving funds, all of those sorts of things. And if you've not yet had a chance to interact with Rachel, you likely will in the future, and you are in for a treat. So I would just love it if you all would just shower her with birthday wishes in the chat as we get started here. So happy birthday, Rachel.
Yeah, we'll go ahead and get our slide deck pulled up here and launch our fund.
Here we go. All right, let's get our
Screen share. All right, hopefully everyone sees everything they should be seeing right now for the Black Swan Real Estate Secure Freedom Fund. You're here at the official launch. Congratulations. It's a fun day here.
Our disclaimer today, per usual, we're talking about a live investment opportunity. We will be talking about historical performance of the portfolio and the company. Historical performance does not necessarily guarantee future returns. We'll be making forward-looking statements, and those are not necessarily guaranteed. All investing does have risk, including the potential for loss of capital. This investment is a Reg D 506C that's available to accredited investors only. And we encourage you to speak with your personal professionals like a tax advisor, financial planner, accountant, whoever is important to you as you're making any investment decision.
Hey, we've got quite a few folks with us today already. So this is your first time with us. Just a little bit about us. My name is Nick Stageberg. This is my lovely wife, Dr. Elaine Stageberg. We're been married now for about 14 years. We've got 5 beautiful children so far. We like to do everything at scale. Elaine had a background in psychiatry, trained at the Mayo Clinic here in Rochester, Minnesota. I had a whole career in technology. I have a bachelor's degree in ministry, a bachelor's degree in computer science, and had the privilege to do some fun tech startups before doing this real estate startup. And we are on a mission to make the world a better place to live in the most tangible sense of the word. And we're so excited to have you along with us on this journey. We hope that we get to be part of your journey. And if you're wondering, what are some of our qualifications, the numbers here. So we have the privilege to manage over $400 million in assets so far. It's about 1,600 doors, mostly here in Minnesota. We're very vertically integrated. We have our own property management company. We have in-house lawn, snow, cleaning, maintenance, all of the not glorious, not sexy things that other groups tend to vend out. We love to do those things in-house because it gives us an exceptional amount of control over the cost and the quality of everything that we do. We've raised a fair amount of capital, nearly $100 million. We're going to probably hit that 100 million number with Secure Freedom Fund here in the near future. Should have a little party or something. We do real estate sales. So I'm a licensed real estate agent, hang my real estate license at Keller Williams. We're in the top 1/3 of 1% of teams at Keller Williams, which is the largest real estate organization on earth. Get the privilege to be in Gary Keller's personal mastermind, which is the most elite real estate mastermind on earth. And so we sell a lot of houses. Was hanging out with my aunt and uncle yesterday and couldn't help but give them some advice on a home that they're selling right now. And then finally, we do a little bit of ground up construction, about $50 million of ground up construction. We've got a building that's going to get its certificate of occupancy in about a month.
Oh, so exciting.
Yeah. We'll say 2
We're
months.
having like our own baby bird for spring.
Yes. Yep. It's just a little bit about us and some of our background in the real estate industry and why this is such a great opportunity to join us on this journey.
So as I mentioned, we're excited to officially launch the Secure Freedom Fund. For those of you that have been in our community for a while, you'll find that it's quite different than what we now are calling our legacy funds. So Fund 1, 2, 3, and 4. And yes, there will eventually be a Fund 5. That question comes up a lot. That will probably happen in 2026 or later. We're really focusing our efforts on Secure Freedom Fund this year. And in a lot of ways, as you'll see throughout the presentation, the Secure Freedom Fund is kind of the opposite of our legacy funds. And we find that it clicks in really well with our legacy fund. So just in brief, if anyone is kind of wondering what that means, our legacy funds are long-term hold plans where people invest in those funds. There's no GP level fees whatsoever. 100% of the profits go back to our partners until they're completely repaid over about a 5-year time frame. And then after that, we hold those properties indefinitely in a 50-50 split with quarterly distributions. And then the Secure Freedom Fund really came out of doing all of the investor calls. Nick and I have done all of our investor relation calls going all the way back to the beginning of our company. And we do that so that we can get to know you and get to understand you and hear about what you're excited about, what you're worried about, what your financial goals are. And what we heard over and over again over the last year is that investors are looking for certainty. And so we've created this fund. And in a lot of ways, it's a lot of fun for Nick and I because it's really going back to our roots, all the way back in the beginning when we first started working with passive investors for 2 little single family homes that Nick got under contract when we already had 4 single family homes that we were renovating with our own dollars. He came home and he said, I got those 2 neighboring properties under contract. And I'm like, oh, well, how are we going to pay for them? And he said, we'll offer a 10% fixed rate of return to passive investors. And that was the very first way that we ever worked with passive investors. So in a lot of ways, this Secure Freedom Fund is coming home to our roots, and we're so excited about it. It's a really simple fund. It pays a 10% fixed rate of return to all investors, regardless of investment amount. The minimum investment is $25,000, and you can invest in $1,000 increments above that. And it's very personalized. So you can choose your investment amount as long as you hit that $25,000 minimum. You can choose if you would like to receive monthly distributions. Those are processed on the first of each month. And so, for example, in a $100,000 investment, your monthly payment would be $833. Or you can choose for your returns to compound, and we compound those monthly, and that very significantly increases the total rate of return. We have a chart on the next slide to share that with you. And then it's important to note for tax reasons that the payments in this fund are preferred returns. So they're not what's called guaranteed payments. That's a very specific piece of language in the IRS tax code that drastically increases tax liability. Preferred returns is a type of equity. This is an equity fund, and it drastically reduces the tax liability. So not only were we thinking about meeting investors' needs for security and certainty with the 10% fixed rate of return, but as always in any of our passive investments, we're always thinking about how we can make our investments the most tax efficient. And so we're going to have a few slides to talk about the tax efficiency of the fund as well. And then it's important to note that in our company history, we've never failed to make an anticipated preferred return payment. So let's talk about what the returns would look like.
So you've got two options. You can either take the monthly cash flow option or the accrue and compound option. So we've got two scenarios for you to look at there. The monthly cash flow option is on the left and the accrue and compound option is on the right. So hypothetically, if you were to invest $100,000, you would start getting $834 per month starting the following month. Those distributions begin immediately. If you want to do the accrue and compound option, which is the option that most people go with, we allow that to accrue and compound monthly. So it's a very powerful compounding. And in the first year alone, that adds up to a 10.47% rate of return versus the 10% fixed rate of return with the monthly cash flow option. And that compounding accelerates very quickly. We've got an example chart there. You can see by the time you get to, say, 60 months, you're at a 15.6% compounded rate of return, and you're well on your way to doubling your money. So we could dive into the details, but the fact is this is a very simple vehicle, and hopefully you can understand if you were to put in 100K, you start getting $834 a month, or you would start accruing compounding every month, which allows you to accelerate your wealth growth and compound that rate of return very quickly.
It's worth mentioning that Rachel just opened the fund, so it's live on the portal at securefreedomfund.com. We did open it to our wait list about a week ago, and we've already raised 4 of the 5 million that we're raising during this round. So if you'd like to get in, there's that million left, which I expect will go pretty quickly, and you can find all of that at securefreedomfund.com. Let's talk about the return structure. So sometimes in a fund like this, you don't actually start earning returns for maybe weeks or even months, even maybe 90 or 120 days after your capital is deposited into the bank account. And in our vehicle, you start earning returns the day your capital is deposited, and you earn those returns until the day your capital is returned to you. So the entire time your capital is deployed into the fund, it's working for you, earning that 10% fixed rate of return. As Nick mentioned, if you elected to do monthly distributions, your first distribution would be on the first of the month after you started the investment for however many prorated days there were in that month. And then your first full distribution would start on the first of that subsequent month. And then it is important to note that there's a lot of flexibility in what is called redemption, which is how you exit the fund. And theoretically, you can choose to exit the fund even immediately if you needed to, if there was some change in your financial status and you needed to exit the fund. But do note that if you exit the fund within the first 1 year, you do surrender any of the preferred return that has grown, kind of similar to if you cashed out a CD at a bank early. And in our next slide, we'll talk more specifically about how you can come into the fund and how you can come out of the fund. That's called investment and divestment. And you'll see, for those of you that are familiar with our legacy funds, that in a lot of ways, it's very different than the legacy funds in that you as the investor control the timeline of when you would like to enter in the fund and when you would like to come out of the fund.
It'd be valuable just to mention that most fixed return vehicles, most preferred equity funds, debt funds out there, you don't typically start earning a return until after your capital has been placed in a deal. So just as Elaine mentioned, it could take 30, 60, 90, 120 days before you start earning a return. And then typically when you request redemption, your return also ceases in most other vehicles. And with our vehicle, you earn that interest from day one until the day you get your money back. And then that 1 year period where you can request redemption that first year, you just wouldn't earn a return. Most vehicles, they have a 1 to 3 year lock-in or lockup period where you can't request redemption at all. So there's lots of little ways and many big ways where this is just kind of a little bit better than most other fixed income vehicles out there that we've seen anyway. We've kind of compared what we offer with everyone else out there, and we like to think ourselves like the Chick-fil-A of real estate investment. There's other places you can go out to eat, but Chick-fil-A, it's just a little bit better in every way. You're just like, man, there's just something here where it's just a little bit better in every way, and that's what we have targeted here for the Secure Freedom Fund. If you would like to get started, it's easy to get in. As Elaine mentioned, we've got a little bit of room available here. We actually had to pause commitments into the fund because we had so much capital rush in the first couple of days. We were very concerned we'd get overfunded and we'd have this fund launch and there wouldn't be anything to launch. So we did just open the portal here right before we went live on this webinar. If you're interested in investing, we would strongly suggest that you go ahead and invest right now. You can go to securefreedomfund.com if you would like to invest now. This fund is going to open and close basically based on demand and deals that come to the vehicle. So right this second, we're preparing to close on the next apartment building that's in Secure Freedom Fund. There's some properties in it right now. We're going to close on one this Thursday. So we're kind of topping up the funds to get ready for that closing. We have another closing scheduled for May 1st. And then we have another closing, hopefully that'll occur June 1st, somewhere between June and July 1st. So if you aren't able to get in today, it's very likely that there will be an opportunity to invest, sometime in the next few months. We're terrible sometimes at projecting scarcity. Just know that the fund is probably going to fill. The remaining space that's available is probably going to fill today, maybe in the next hour or so. And if you're not able to get in, we very much want to serve you. You're welcome to reach out to us. Let us know what your plans are, what is it you'd like to achieve, how we can help you achieve that. And we'll do everything in our power to make sure that you get onto the wait list if you're not already on the wait list for the next time the fund opens. And we're able to make sure that when those openings are coming up. If you do want to request divestment, that's just as easy. You can reach out to us anytime and say, hey, I'd like to get my money back, please. Again, if you request divestment redemption the first year, you forfeit your return, but you can request your principal back anytime. The longer you stay in the fund, the easier it is from a tax perspective, and we'll dig into that here in just a little bit. And it's important to mention that in all the time that we've been doing this type of investment option, we've never failed to honor a redemption request. Also valuable to contrast most other fixed income vehicles out there, most debt funds, preferred equity funds. There's typically very specific rules, redemption windows, where you can only request redemption in like the first week of the quarter of the year or something of that nature. You can request redemption anytime you would like with our vehicle. We try to make it as flexible as possible for you.
As we were putting together the fund, we looked at how this would compare to other fixed return vehicles similar to like a CD or a bond. And we wanted to make this, a double-digit rate of return. So it has a 10% fixed rate of return. In a lot of ways, it's comparable to annuity rates, but say unlike an annuity where traditionally when a person dies with an annuity, the principal also dies with them. In this option, the principal, of course, would survive you. So we pulled some numbers here. These were from last fall of a 10-year treasury bond. At that time, it was 3.83%. A CD was ranging somewhere between 3.25% to 5.25%. A money market account was also somewhere around 5.25%. And a Vanguard or Fidelity short-term bond ETF was about right under 4%. And so for, typically what investors get when they're in a fixed return vehicle is they get security and certainty, and in exchange for that, they get a relatively low rate, as you can see with the examples here of other comparable investment opportunities. And in our offering, you get kind of the best of both worlds. You get that security and certainty, and you also get a higher rate of return that you typically would only find in, say, a variable rate of return, where there tends to be more uncertainty and more risk. And then, as we mentioned, we're always thinking about how we can tax optimize our funds. And so we put a lot of thought as we were creating this fund into tax efficiency, and we'll share that with you now.
Yeah. So first and most critical is that you get paid on a K-1 and not a 1099-I or 1099-C. So the vast majority of fixed income vehicles, like the ones we just mentioned, bonds, CDs, most debt or pref equity funds, you're typically going to be paid on a 1099-I or a 1099-C. And even if you're paid on a K-1, you're often paid at an ordinary income tax rate. So many preferred equity funds, you might get paid on a K1, but you're typically getting paid on an ordinary income tax rate, and you have to pay that as you go. With the way we structure this vehicle, our goal is to assign an amount of depreciation to you that would ideally add up to approximately the amount of gain that you would get in that year. So let's say you put in $100,000, you had $10,000 of gain that compounded that year. We would allocate $10,000 of depreciation to you. Let's say you stayed in that vehicle for a number of years, for several years, and you deferred all those gains until you exit, until you request redemption. That makes it the easiest for us to help optimize your tax burden with this investment. In that case, you'd pay most likely on a long-term capital gains tax basis. So instead of paying ordinary income tax each year as you go, you would ideally pay a long-term capital gains tax at the end when you exit the vehicle. Now, it's important to note that we can't promise these outcomes because we can't control exactly how much is yielded from a cost segregation study and different legislative changes that could happen along the way that are outside of all of our control. Just know that we're going to allocate as much depreciation to you as we can, and we're going to try to push as much of your profit into long-term capital gains along the way. So let's just, put together a hypothetical scenario. We're not saying that this will happen. This is just for illustrative purposes. Let's say that you invested in one of those other fixed income vehicles that we mentioned where you get a 4% tax rate and you're typically paying
a 4% return rate.
I'm sorry, a 4% return rate. 4% tax rate would be really nice. Let's say that you're paying an ordinary income tax rate, which is typically in excess of 40%, depending on your tax scenario. So your after-tax rate of return is only 2.5%. You're barely keeping up with inflation, or not even keeping up with inflation here the last few years. So compare this to an investment in the Secure Freedom Fund, where you did the accrue and compound option. So you'd get a 10.47% rate of return just in year one. Remember, that will compound from there. We're not even taking into consideration that benefit here. You'd only lose 20% to long-term capital gains. Now, sometimes your long-term capital gains could be 0 or 15%, depending on your income. So we're putting a very conservative scenario here. Your after-tax rate of return is 8.38% versus a 2.5% rate of return with that other fixed income vehicle. It's more than triple your after-tax rate of return. And again, this does not even consider the fact that you are hopefully deferring much or all of your gains along the way, which allows you to compound even faster. And it doesn't take into advantage the fact that would compound in the time value of money. So really your kind of after-tax return is even higher than this scenario would illustrate. We're trying to give you a conservative scenario. Again, cannot promise this is your exact scenario, but this is just an illustration of how powerful this vehicle is compared to a typical fixed income vehicle.
So let's talk about what we do with the capital. So really, we think of this as like the next era of the Black Swan real estate portfolio. We've grown the portfolio over the last many years in our legacy fund models, and now we'll be growing the portfolio with the Secure Freedom Fund model. The Secure Freedom Fund is sized at $100 million, so it will acquire somewhere between, say, $400 and $500 million of assets after we factor in mortgages over the next many years. And per the usual Black Swan real estate portfolio, we will invest that in anything from single family homes to large multifamily communities. We'll do our value add plan. We will hold them. We could exercise a cash out refi. We could exercise a sale, whatever is most tax advantageous so that we can hit the return targets to our investors. And we already have a couple of assets that are owned by the fund. We'll share that here in the next couple of slides. And then as Nick mentioned, we have a few assets that are closing in just the next couple of days, which is really exciting. Our team is actually at that apartment community already today, working on the transition because we're closing on Thursday. And then we have some additional assets. So essentially how it will work is we will open and close the fund as we get new acquisitions under contract. If let's say we get a $20 million apartment community under contract, we need to raise, say, $5 million for that. We'll open, we'll raise that $5 million, then we'll close. And then in the weeks or months after that, as we get other assets under contract, we'll open and close the fund until we hit that $100 million of total raised capital.
So how do we protect your money? This is probably like the most important question that you should be asking yourself. Right now, there's a lot of headwinds in the multifamily industry for groups that did not get fixed rate debt during the pandemic. About 7% of all deals that closed during the pandemic closed with fixed rate debt. 93% of all multifamily deals closed during the pandemic closed with variable rate debt. Fortunately, the the vast majority of all of our debt that we have on our books right now is fixed rate debt. We were that 7% fixed rate debt. So we're well positioned to make some great acquisitions right now. But we realize right now it's a time of uncertainty for investors. And that's why we're offering this certainty fund, essentially this 10% fixed rate of return. There's a lot of preferred equity vehicles, debt vehicles out there right now that are essentially raising rescue capital. So I would say the vast majority of preferred equity and debt funds right now, unfortunately, are raising rescue capital. So these are deals that different groups put together over the last several years, and those deals have lost so much value, or their interest rates have gone up so much, or the amount of debt they're eligible for has gone down so much that they have essentially lost the investor capital that's already been put in, and they're trying to raise additional capital to save those deals, so those deals do not get foreclosed on. This is not rescue capital. Our existing portfolio is in great shape. And fortunately, we have not needed to do any capital calls. We've never lost money on a real estate deal, anything of that nature. So this is new equity that we're raising for new deals. This is there's no equity, there's no cash that's going into any existing deals. So the first and foremost thing is this is not rescue capital. We buy with a margin of safety. This year we're getting some really good deals on the things that we're purchasing because it's a tough time to be a seller right now. There's not as many buyers in the marketplace, and so we've had an incredible buying opportunity to buy with equity, and we're buying assets that have a value add opportunity, ways that we can create or add value to those communities with management, renovations, our typical playbook, which is how we've created so much value in our existing portfolio for our legacy funds, and we're creating value and security the exact same way in the Secure Freedom Fund. These assets are high cash flow assets, which changes the profile a little bit of the assets that we're purchasing. It's a very difficult bogey for us to hit, that 10% rate of return. So we have to be really careful about it. And that, of course, is a means of security for you that we're able to buy these deals. They're able to produce that 10% rate of return. We love talking about our vertical integration. We just bought dumpsters today. So that's a new level of vertical integration. I heard
you calling the bank this morning. Yeah. I was happy for you.
we vertically integrate all of the unsexy stuff. We have bought we're on track to maybe purchase like 100 construction dumpsters this year. So we bought a hydraulic dump trailer and dumpsters that you haul off and stuff like that, so we can cut out the middleman and haul our own waste to the dump. So that's just one way that we create additional security in the deals that we put together. We have no fees whatsoever. There's no acquisition fee or asset management fee, anything of that nature in this fund. So that rate of return, that is your actual rate of return. There's no points or anything that are getting shaved off of that. We are buying deals that have an indefinite hold period. So there's no requirement for us to exit those deals the way most closed-ended funds are, which can be a real risk that you have to keep in mind when you're investing in a vehicle. And there is no ability for us to issue an involuntary capital call in this vehicle. We cannot say, hey, you put in 100K, we need you to put in another 100K, as is the case with most other vehicles out there of this nature. So those are just a few of the ways that we create a lot of security in this vehicle. Jeremy had a great question there. What is the risk profile of this fund in comparison to a broadly diversified index fund that includes stocks and bonds? Excellent question. So, if you look at CNN, right now is not a great time to be invested in the stock market. And in a world where it looks like, we're going to be reducing the size of government and maybe, instigating a recession or something like that in the immediate future, the stock market tends to be really kind of jumpy. It tends to, go down in value quite quickly. With this vehicle, your risk of loss of principal is extremely low. It's a fixed rate of return, and your principal is not at risk in the same way it is with an investment in the stock market. You mentioned investing in bonds. That's another very interesting thing. I appreciate you bringing that up. So the way bonds work, depending on how you own them, if you're in like a bond fund or something like that, if interest rates were to rise, it actually lowers the value of your bonds in a very significant way, especially if that's leveraged in any way, shape, or form. So people think of bonds as a very safe harbor for investment, but when interest rates rose here after the pandemic, people figured out that you can actually lose quite a bit of money in bonds. And so none of those risks exist with this particular investment. We've been doing this for quite some time. We've offered different versions of this 10% fixed rate of return vehicle. This is the first time we've done a Reg D 506C opportunity that we can publicly advertise to accredited investors. In the past, we've just done private opportunities. However, in all the time we've done that, we've never failed to make a preferred return payment. We've never failed to honor a redemption request. We've never lost investor capital. So we perceive this to be an extremely low risk vehicle. Also important to mention that this is a relatively low leverage vehicle. We bootstrapped this vehicle with our own capital when we purchased Northern Place Apartments, and now we're backfilling that capital with investor capital as we put more deals into the fund. So our dollars, Nick and Elaine's dollars, I think we put in 1.4 million or something like that to bootstrap the fund. Ours were the first dollars in. Those are the highest risk dollars into any vehicle, and now we're backfilling those those dollars with investor dollars as we put more deals into the fund.
Another question came in that I'll answer right now, and that is, does the fund have a first lien position? So the fund has a better than that. The fund owns the actual real estate. So we're not lending the money to other operators. We're not putting liens on properties. The fund owns properties. The only capital in any given asset is the mortgage from the bank and then the down payment from the Secure Freedom Fund. So it's much better than a lien position because it's actual ownership. Yep. So let's talk about what we have under contract. This spring has been so fun. As Nick has mentioned, there are not a lot of buyers in the pool right now because so many buyers are in, such difficult positions with deals that they put together over the last several years with capital calls and potentially even capital loss. And so they're unable to continue to raise capital. And we have the good fortune of not being in that situation. And we've had great response to the Secure Freedom Fund so far from our existing investors. And that has allowed us to acquire things that years ago would have been a really, really, really tough competition. And just the whole tenure has changed, right? Years ago, brokers would just literally hang up on us and, all sorts of things. And now they're calling us every day. Like, do you want to put in an offer? Like, what can I do to help you? And that's a favorable buying position to be in.
One broker followed up with us 6 times in the last month on a deal that they're publicly marketing. The exact same broker that would barely return our call a few years ago.
Yeah. So the fund, per usual, like the general Black Swan real estate portfolio, will have some single family homes. We already have a few single family homes that are owned by the fund. That middle bottom picture is Meadow Park Apartments. That's a 90-unit community here in Rochester. That's where our team is today. We're closing on that one on Thursday. In a lot of ways, this is going to be one of the biggest lifts in our entire company history. It's such a deep value add, and that adds, so much margin of safety because it's a little bit paradoxical, but the worse off a property is when you acquire it, the more room there is to improve it. So we're excited about that. We've kind of, psyched up the team and told them guys, we're ready for this. It's our first ever apartment acquisition that we're acquiring in all cash. Because it's so distressed that it doesn't even qualify for financing. And that sounds a little paradoxical, but that's actually where a lot of the margin of safety comes from, because it gives us so much runway to improve it with physical renovations and with management improvements. Down in the bottom corner there is Northern Place Apartments that, as Nick mentioned, is already owned by the fund. We closed on that in 2024 when we just gently soft launched the Secure Freedom Fund. And then in that upper corner is Rainbow Plaza, which we are slated to close on in about 6 or 8 weeks. And then, as I mentioned, as we continue to get new acquisitions under contract, we'll continue to open the fund for probably several years until we hit that 100 million raise target.
Yeah, so great question. How do you decide which properties go into the secure fund versus launching a new fund? So Rainbow Plaza, we are assuming some very long-term debt on that particular property, which will allow us to hit that 10% cash on cash rate of return with some blood, sweat, and tears. But that's not an asset we're going to be able to cash out refi for long after that 5-year time frame, and so it would not be a good fit for the legacy fund. That's not an asset that we would have bought in the legacy fund because the time horizon on that is too far out. So we're getting it at a great basis with a relatively modest down payment that allows us to hit that 10% cash on cash rate of return. But let's say it's 8 years from now when we're able to do a cash out refi on that when the current debt matures. It's unclear, we would not be able to get a return of capital to our investors in that time horizon. So also important to note that we've been really careful to try to avoid having parallel vehicles going. So when we have a vehicle open, we try to, any deal that's a good fit for that vehicle goes into that vehicle. So we'll probably not have the Secure Freedom Fund open in parallel to a Fund 5, hypothetically, or something of that nature. So excellent question there. Hopefully I answered that question successfully there. Okay, so here's some ways that we're different. We've alluded to a few of these things, but let's really hit the nail on the head. No GPs whatsoever. This is just something that's kind of unheard of in the industry. So typically there'd be a bolus of rescue capital that's raised by one group to go rescue a deal from another group, and no matter what, you don't want to be, the money that's bailing out the sinking ship, and then to be paying fees to an unrelated GP along the way. It just seems like kind of a risky proposition. That's why this is not rescue capital in any way, shape, or form. We've never sold an asset. We've never had a capital call. We've never lost money on a real estate deal. We've never failed to make a projected distribution on time. It's important to remember that you start earning your money day one, which is a huge contrast from most fixed income vehicles out there. We target blue ocean markets. Most of the acquisitions that are in this fund are going to be in Minnesota for the foreseeable future. All of the acquisitions will be in Minnesota. Right now, Minnesota, if you look at vital statistic rankings like talkpoverty.org, Minnesota ranks in the top 1, 2, or 3 in almost every single ranking for median degree attainment, for median credit score. It's just a very safe, boring market to invest in, and we absolutely love investing in this state. It's important to remember that we're getting fixed rate debt on all the investments that are in this vehicle. Even though the loans that we're assuming fixed rate debt and all of our points of vertical integration. Jeff asked a great question here. Notice that most of your prior investments are in Rochester, but you're spreading out to other locales. Have you basically bought up all of Rochester and need to find new places to invest? I wish I could say that we had purchased all of Rochester. So Rochester is a town, the metropolitan statistical area is about 250,000 people, 250,000 people. However, Rochester, it behaves like a town more like 1 million plus. It has an international airport. It has urban core type line, high-rise construction. If you go look up these statistics and stuff like that, Rochester's always in this like smallest town in the United States with international airport, smallest town in the United States with type 1 construction. So Rochester has about 20,000 multifamily units that we know of that are in like different databases and stuff like that. Probably more rental units than that. So it has a pretty massive number of rental unit inventory relative to other communities this size, many times more. And right now we own about 1,200 units in Rochester, maybe going on 13. So that would mean that we own like 6 or 7% of the market. Now, I sure hope we don't ever get to 100%. You never want to be the only game in town. Right now, it seems like it's a really good time to buy in some of these other markets in the greater Minnesota area. It is certainly a diversity thing. So let's say somehow Mayo Clinic manages to go out of business. I don't know how that would happen, but let's say it did. It would be good if we owned assets that were outside the Rochester area. And then as we've grown, as we've built this base of power, more and more brokers are reaching out to us from these areas that are an hour, 90 minutes away from Rochester with deals that we really can't say no to. The deals that we're getting right now are absolutely phenomenal deals that we're excited to buy. And as we spread our wings, so to speak, we're excited to take you along on that journey.
Absolutely. Let's talk about our track record. As Nick mentioned, we've been offering something similar to this privately. It wasn't a Reg D 506C, and so we weren't able to publicly market it, but we've been offering a 10% fixed rate of return with either monthly payments or the compounding option since all the way back in 2018. We've never failed to make a preferred return payment. We've never failed to return capital when it's requested. That's what's called the redemption that we talked about. We've never lost money on a real estate deal, and we're now maturing this into a Reg D 506C so that we can publicly market it and share it with our broader audience. And it really comes from just listening to our investors over the last year or so and hearing the demand for a fixed rate vehicle, for something with more security. People want to have their dollars invested in real estate, but are maybe a little worried about changes in regulation or interest rates, those sorts of things. Or a lot of our investors have put capital into fund 1, 2, 3, and 4, and they feel like they have kind of their generational wealth piece like really squared away, and they're looking for passive income. And so for all of those reasons together, we're very excited to officially launch the Secure Freedom Fund. It is open for about 1 million more of additional investment at securefreedomfund.com. Right from securefreedomfund.com, you can click Invest Now, and that will drop you into the Invest Next portal where you can review the PPM and the operating agreement. You can electronically sign it. You can link your bank account and remit funds via ACH. If you need to wire in funds, they are securely visible there inside of the portal. That's the only place that we share wiring instructions to prevent wire fraud. We don't ever share those via email. And if you know that you would like to invest, but maybe right now isn't the best time for you, they're right at securefreedomfund.com is a place where you can put your name on the wait list. As Nick mentioned, it's likely that we'll reopen the fund maybe in about 8 weeks or so for that acquisition, Rainbow Plaza. And then we're always working on more acquisitions to fill up our acquisition calendar for the rest of the year. And we'll continue to open and close the fund as the rest of the year goes on. And now what we have is some prepared frequently asked questions. Rachel and Nick and I are going to do those together to just kind of hit all of the highlights that people have asked as we've done investor calls or we've gone to conferences or those sorts of things. So this is probably a very high yield time for people. And then we will make sure that we go through all of the questions that were placed into chat. So if you have a question, go ahead and pop that into chat and we'll make sure that we cover all of your questions here.
Yep.
But happy birthday, Rachel.
Thank you for the kind birthday wishes. That was a lovely surprise. I thought launching a fund was enough of a birthday surprise, a birthday wish for today. So thank you.
You're so
Appreciate
welcome.
that. All right. Well, like Elaine said, we've got plenty of frequently asked questions that have come in over time. So we're just going to go ahead and get started. Number one, the PPM mentions that there are multiple share classes. Is everyone receiving a fixed 10% rate of return?
Yes. So because we sized this fund at $100 million and it will likely be open for capital investments for many years, we wanted to have the flexibility to change the fund, as with market demands. And so if you read through the PPM, you'll see that there are actually 4 share classes, starting with a $25,000 minimum and then going up to $1 million or higher. And the way it's written in the PPM, those share classes would have a different rate of return. But for right now, we're offering 10% fixed for all investment types. So everyone will get class A1, a 10% fixed rate of return. And then if we were to launch it with those different share classes having a different rate of return in the future, that would only apply to new dollars that came in at that time. If you invest while we have the 10% fixed rate of return that's available for everyone, your dollars will be in that status the entire time you're in the fund.
Wonderful. Next question is, how do I receive monthly distributions?
So when you invest, you sign up in the Invest Next portal. We recommend that you do a secure ACH transfer. You can wire funds, but when you do the secure ACH transfer, that links your bank account, and that's how the money gets back to you. If you want to wire funds, you can still put your account information in there, and an ACH will come back to you that way. So it's extremely easy to receive those monthly payments, or when it comes time to redeem, that's how the money is going to get back to you, is through that secure portal experience with Invest Next.
Wonderful. And while we're on this question, I'll also add, if you ever have a question about your bank account or anything about your account or your investment within the Invest Next portal, I'm your gal, so feel free to email me at rachel@blackswanteam.com and I'll make sure that everything is properly linked on the back end.
Oh, you accidentally muted there, Rachel.
All right, good?
Yes.
Next question is, how do I receive, or how does the monthly compounding option work?
So the monthly compounding option is really great if someone wants to kind of set it and forget it and benefit from an even higher rate of return. So instead of, let's say in a $100,000 investment, the monthly return would be $833. And instead of that going out to your bank account, it just essentially gets recredited back into your Invest Next account, and it compounds monthly, which is a very aggressive compounding in favor of the investor. And so over, say, a 12-month period, the return goes from 10 to 10.47%. Over a 24-month period, it goes up to 11.5%. And then right there at securefreedomfund.com is the table over a 10-year period of compounding. Theoretically, I think the fund will be open probably 20 or 25 years, so it likely will go even longer than 10 years, but that's what we wanted to put on the website there just for space reasons. And at any time, you can log into your Invest Next portal and see how much return has accrued if you're going with the compounding option.
Most people go with the monthly compounding option. Lots of people do the monthly cash flow option, though, if they're looking for that fixed income opportunity, and you can switch it back and forth. So let's say you wanted to compound for the next couple of years and you kind of are building up that nest egg, and then you want to draw that down, or, well, not draw it down, but draw cash flow from it. You can make that decision to choose to cash flow 2 years from now. It's easy to switch back and forth.
Some investors even have one bucket of money in compounding and then one bucket of money in the monthly cash flow. Truly, this fund is so customizable to your needs. So if you have an idea that, that you want to have a certain amount in compounding or a certain amount in monthly cash flow, or you want to have it in one bucket for a number of years and then switch it, all you have to do is email Nick or Rachel and I, and we'll do all the paperwork for you to switch to whichever option you would like to get into.
I love the flexibility of this fund, which leads into our next question. How would I withdraw my investment when I decide that time is right?
So that's called requesting a redemption, and investors can request a redemption at any time. Theoretically, someone could invest in the fund and then maybe you have an unexpected financial emergency and you need to request a redemption the very next month. You would be able to do that. If you redeem within the first 12 months, you do surrender any of the preferred return. Again, kind of similar to like cashing out a CD at a bank early, where you typically surrender any growth that happens. But after that 12th month, you just request a redemption whenever you would like, and it's kind of business as usual. We process those redemptions on a first come, first serve, best effort basis. I will say the larger the amount that you would like to redeem, if you have, say, $500,000, $1 million, the more headway you can give us to let us know, hey, I'd like to request a redemption in 3 months' time or 4 months' time. That's very helpful so that we can assure that that liquidity is there in the fund to be able to redeem you out. For smaller redemption amounts, say 25, 100, 200,000, I anticipate we would be able to process those in, say, a 10 or 15-day period. And then again, just the more notice you're able to give us, that's very helpful. We just put those notes in the fund on your account, and that helps us with managing the liquidity. But you can request a redemption just by simply emailing in whenever you would like. And then it's also a neat feature of the fund is you can request a partial redemption. So let's say you have $100,000 in the fund and you would like to take some of that out. As long as you stay at the $25,000 minimum, you can do a partial redemption, or you can do a full redemption where you would take all of your dollars out of the fund and completely exit the fund. So either partial or full redemption, and you just email us in and we'll process those.
Our next question is, how is the fund taxed?
Yeah, so you're issued a K1, and our goal is as much as possible to allocate depreciation to you in an amount equal to, or as much as we can, the amount of gain you would have gotten that year. So let's say you put in $100,000 and you would have gotten $10,000 or $10,500 that year in return. Hopefully we'll have enough depreciation available to allocate, $10,000 depreciation to you to defer those gains as long as possible, ideally until you exit the fund. If you do the accrue and compound option, that makes it a little bit easier for us to optimize your taxes. And then when it does come time for you to redeem out, to exit, we're going to do our best to push as much of that as possible into long-term capital gain. So if you stay in the fund for many years on the accrue and compound option, it's going to be easiest for us to optimize that. But we're going to basically do our best to keep your tax burden as low as possible, regardless of how long you stay in the fund, or if you choose the monthly cash flow option or the accrue and compound option. Overall, there's a very good chance that you'll end up paying something like half of the tax rate you might ordinarily pay on other debt funds, pref equity funds, bonds, CDs, annuities, any of those other fixed income vehicles that might be kind of an alternative to this investment.
All right. A more simple question that's actually very nuanced. What do you do with the invested dollars?
So as Nick mentioned, I think the thing that's kind of most important for people to know is this fund is not raising rescue capital. We have no need for rescue capital in our portfolio. We are not investing in other operators' deals. This fund is to grow the Black Swan real estate portfolio, kind of the exact same way we've grown it over the last, almost decade and a half. We're just growing it under a different return structure now to meet the needs and the requests of our investors for a fixed rate of return for that security and certainty. So we'll acquire new assets into the fund, single family homes, large multifamily communities, kind of everything in between. Our two markets are Rochester, Minnesota. We're now expanding into greater Minnesota as well, and then Tacoma, Washington. At this time, all of the assets in the Secure Freedom Fund are here in Minnesota, but theoretically there could be assets in our Tacoma portfolio as well. And then one thing I'll add in this part is about state tax returns. That's a question that often comes up. So one of the nice things is if this fund gets properties in Washington in the future, the state of Washington does not have personal income tax. So investors don't need to file a state income tax return there because there's no such thing. And then investors would need to file a state tax return in the state of Minnesota. So just that one state. We're not investing in multiple states all over the country so that you would have to file, multiple state K-1s. So we're buying new real estate assets, taking very good care of them, doing renovations, doing great management, holding them indefinitely, and generating those returns to be able to share out that 10% fixed rate of return to our investors.
What is the size of the Secure Freedom Fund, and what do you mean that the fund will open and close?
So right now we have the fund sized at $100 million of total investor capital that will be raised, and that fund will be open to new investment during very specific periods of time when we get a new opportunity under contract. We need to raise capital for that new opportunity. And then the fund will be closed when we don't have a need for additional capital. It's really expensive capital, so we don't want to raise that capital until we are absolutely certain we know that where that capital is going to be invested. So most of the time, the fund will be closed. It will not be open to additional investment. People will be welcome to put their name on the wait list. And then when we do open that fund up again, the people on the wait list will kind of have the first opportunity to invest, just like how when we opened it this past Sunday, investors from the wait list kind of filled that first tranche of funding in just a couple of days. And it looks like, just based on what I'm seeing right now, we're just about full in the amount that we're raising today. If we close it here after the webinar, you can put your name on the wait list if it's not already on the wait list, and then you'll get that first opportunity to invest when it opens up again in the future. Now, wait list is really important for us because we use it to size our acquisition pipeline. So if there's $5 million on the wait list, we might go get something that needs $5 million to purchase. If there's $50 million on the wait list, well, we're going to go get a bigger boat and look for larger assets that will need a larger amount of capital to purchase. So if you are interested, go ahead and put your name on the wait list so that we are able to get you in for the next opportunity, and we know just how much capital we're likely going to be raising in the future.
So you can do that at securefreedomfund.com. Right there, there's either a button for invest now, and I do anticipate that we are going to close the Invest Next portal probably 30 minutes after we end the webinar because we're very close to our target. So if you go to Invest Next and you see that the Secure Freedom Fund offering is closed, that's because we've hit our raise target for today. And then at securefreedomfund.com, you can put your name on the wait list. So either if you're not able to get into this round, or if you're interested in this, but for your own personal financial reasons, this time doesn't make sense to you, but you want to be the first to know when we open it in the future, that's the benefit of the waitlist. And all of that is right there at securefreedomfund.com. When we open it, we first open it to existing investors, so people that have already invested in the fund, to see if they would like to add additional capital. So that was a question that came up. Yes, you can add as you go. Even from the investors that came in last fall, it was like November, December when we opened the fund. Many of them added another, say, 10 or 20,000, because once you hit the $25,000 minimum, you don't have to add in $25,000 increments. You only have to add in $1,000 increments. So we first open to existing investors, and then we open to the wait list, and then we open to our broader community. So that's how the opening and closing works and the relationship with the wait list.
Mm-hmm.
All right, well, that wraps up the prepared Q&A that we had, but I know we've had a lot of great questions come in the chat here, so I know we can go through a few of those. All right. Mike asked, will there be any distributions with any properties being refinanced or sold within the fund, or is the 10% the only returns possible?
Excellent question. So this is a fixed income vehicle. So you don't have any of the upside or downside. The 10% is your return. So regardless of kind of what capital events happen in the fund, anything of that nature, you get your monthly cash flow payment, or it accrues and compounds as expected.
Great. What is the minimum to invest?
$25,000 and then $1,000 increments above that.
All right. So for someone who maybe doesn't want to make it into this round while the fund is open, but is interested in investing in the future, will the next round of the Secure Freedom Fund look the same? Will it have the same conditions?
Yeah, it's possible that in the future we may offer a lower rate of return for smaller investment amounts. At this time, we really want to build a broad base. We would actually rather have, say, 100 investors with $25,000 invested than 25 investors with $100,000 invested, because we see those people adding more capital over time. So typically we would incentivize people to invest larger investment amounts, but in the early in the life cycle of this vehicle, we'd love to get as many investors in as we can. And then unlike our legacy investors in funds 1 through 4, where you could be in that vehicle for 20 years and we don't really want to be giving you a $25,000 K1 for 20 years, it's easy to get in and easy to get out of this vehicle. It's very flexible in that way. So there's much less accounting overhead involved with having smaller investment amounts.
What is the minimum hold period?
So there's that. Go ahead.
No, you go ahead.
So there's that 1 year time frame where if you request redemption that first year, you can still get your money back. You can still get your principal back. You just won't earn any return. So the vast majority of debt funds, preferred equity funds, they have typically a 1 to 3 year lockup or lock-in period where you can't request your money back at all. So this is a much more favorable setup than most of the alternatives out there. And it's a relatively modest penalty. And the reason we have it in there at all is just it's very cumbersome for us from an accounting perspective to have someone like get in the vehicle and then get out 2 months later. This is not a savings account. This is a longer term commitment than that. So we'd like to see someone in the vehicle for at least 1 year. It also really kind of wrecks the tax advantages that you would potentially get if you're only staying in that vehicle for a few months. You're contemplating short-term capital gains or ordinary income tax at that point. And we really would love to see long-term investors that are benefiting from the incredible tax advantages of this vehicle.
Let's see. David asked, is the Secure Freedom Fund accepting self-directed IRA funds?
Yes. So just like funds 1, 2, 3, 4, the accounts, and Rachel, help me out if I forget any, the accounts that you can invest through are as an individual, as a married couple, an LLC, a trust, a self-directed 401k, a self-directed IRA. I think that's everything.
I believe you got them all.
Yeah. So people do ask if you can invest with retirement dollars, and you can. Lots of people do choose to do that. There were some questions about, say, the tax advantages in, say, a 401k or an IRA. And it is generally true that those accounts have they're like kind of more tax protected than even the tax efficiency that a general, a real estate investment is able to offer. But lots of people do choose to invest in those vehicles. It's important to note for a self-directed IRA that the fund does use mortgages. So the returns could be subject to UDFI or UBIT. So you would just want to talk with your personal tax advisors as you're making those decisions. But we have investors across all of those various investment classes. So it would be individuals, married couples, LLCs, trusts, self-directed IRAs, and 401ks.
Mm-hmm.
Some questions.
If you already have a self-directed account set up, just to make sure that you consult with your custodian on signatures for the paperwork, on wiring the funds. You'll be in communication with your custodian a lot, and then we'll be able to help you out from our side as well, to verify wiring instructions over the phone, make sure that your custodian has everything that they need from us on our end. So feel free to email me with any questions about that.
Paul Rose asks, is the 10% guaranteed? Great question, Paul. So it is a fixed rate of return, a 10% fixed rate of return, but it's not a guaranteed rate of return. As soon as we use the word guarantee, that's a very special term from an IRS perspective. At that point, the IRS would tax it at an ordinary income tax rate. Another kind of colloquial term is it's a soft pay pref versus a hard pay pref, which is a guaranteed payment is a hard pay pref, and what we're issuing is a soft pay pref. And that's how we're able to hopefully get as much of your investment as possible into long-term capital gains and deferring as much of that tax as possible. If it was a guaranteed payment, it would have to pay as you go, and it would have to be ordinary income.
We had a question come into the Q&A box. Do you anticipate launching the legacy fund model, so Fund 5, in 2025?
We don't anticipate launching Fund 5 in 2025. I anticipate it will come in 2026 or maybe even 2027. The Secure Freedom Fund is a $100 million fund, so it's the largest fund we've had to date. It is essentially the same size as Funds 1, 2, 3, and 4 combined. And so we'll be focusing on this for the foreseeable future. Fund 5 will come in the future. That's the model that we know and love. We created that. It's unlike anything else that's available that we know of in real estate investing. So it will come, but it will be quite some time that we'll be focusing on the Secure Freedom Fund.
Also important to note that nothing changes whatsoever for any of our existing investors. So years ago, we used to help investors purchase single family homes. And when we switched the fund model, we did not change anything whatsoever with those previous investors. And just because we're launching this vehicle doesn't mean that we're any less committed to funds 1 through 4. And we love how those funds are performing and look forward to being in those vehicles for decades to come.
We had another tax question come into the chat. Is the gain treated as interest, dividends, or something else?
So I am not a CPA or tax attorney or anything of that nature. There can be different things that impact which boxes the income can show up in, because you're technically a full partner in this deal. So for example, a capital event where we do like a cash out refinance shows up in a different box. The proceeds from that are technically tax neutral versus the income that is generated from cash flow from monthly payments. And your debt pay down on a mortgage technically shows up as a gain on your K1, even though you don't actually get any cash from that. So that question is actually a little more complex than it might seem, and there could be income that show up on a few different boxes. That's why we've kind of aggressively qualified our language to say that our goal is to defer as much of that as possible, and when you do exit the fund, to push as much of that as possible into long-term capital gains. That reminds me, someone actually asked why they were getting interest income on their K1 for Fund 3 or Fund 4, because we put money that, cash that we haven't deployed yet into a high yield interest bearing account. And it's like not an insignificant amount of interest, because we might have, $10 million laying around for a short period of time. So they were wondering why they were getting interest on their K1. So you could have interest showing up potentially on your K1 for this vehicle as well, because we do earn interest income in that vehicle, and we make sure to tell the IRS about all those different forms of income.
I'm going to put, I'll make sure it gets in the replay. I'll put it in the chat here. We have a very helpful K1 Q&A webinar that we recorded last year, I think, with our CPA. So that helps answer a lot of tax questions that we get as well. So I'll make sure that gets out to everyone. Let's see. All of the 100 million in the Secure Freedom Fund will be used only towards real estate, or is there something else in the mix?
All real estate. Yep.
Excellent question to ask.
Mm-hmm.
We're not buying a boat or a vacation home.
Or lemonade stands, I like to say.
That's right. All real estate.
All right. What is the average investment?
Well, we've got the numbers sitting in front of us right now. So we've got, amongst complete investments.
Want me to pull up the calculator?
Yeah. What's 5.4 million divided by 63, a little under 100K? And that's of, where funding is complete and everything so far.
87,000.
Yep. Yeah. And then we have about 7 million in the pipeline right this second as well. We're pretty much on our target here for the amount that we hoped to raise today.
All right, that is all of the questions that I have on my list that have popped into the chat. So now's your very last chance to ask those questions if you have any.
Lots of great questions. Worth mentioning that we do have our calendars out there as well. If anyone wants to block 15 minutes to chat one-on-one with Elaine and I, we're happy to do so. I was chatting with one investor while I was doing some chainsawing in our woods this weekend, cleaning up dead brush and stuff like that. I've got my headset in at all times, so we love to connect with our investors whenever we can. If this is something that you're interested in for the future, but right now is not a good time, we'd be happy to chat about that and make sure we're able to try to line up openings in the fund. That investor that I was speaking with, they were starting out at a $400,000 investment, and they just wanted to have a 5-minute call to just, talk to me and, feel good about that investment. I totally understand that when you're contemplating a very large investment over time. So we're here for you to answer any questions that you might have if there's something you want to ask privately.
I'm sure Rachel will put those. Oh, she already put the links to the calendar there in the chat. Those are also available right at securefreedomfund.com. At any time, you can email myself, Nick, Rachel. We're here to support you. As I said, I do anticipate we're going to close the fund pretty shortly here this afternoon. So if you'd like to get in, either go ahead and get your paperwork started or email us right away. And then put your name on the wait list if you're unable to get into this round, so that you could hopefully get in a little later this spring when we reopen for the acquisition of Rainbow Plaza. It's a pleasure, as always, to serve you. It's so fun to launch this fund officially. As I mentioned, we soft launched it it was either November or December. I can't exactly remember when, but we soft launched it late in 2024. And lots of people have, kind of heard about it or heard the words and like, what's that Secure Freedom Fund thing? And so it has just been such a pleasure for you to join us for this webinar today to really launch like the next era of Black Swan real estate with our $100 million Secure Freedom Fund. It's always a pleasure to serve you. Reach out if you need anything. Have a great rest of your day and happy April tomorrow.
Yep.
Spring is coming.
Spring is here.
Bye, everyone.